Hi, I'm John Wallace, the area sales manager for CMG Financial here in Southwest Michigan, here to help you understand the mortgage process for buying a home. Your credit scores are one of the most important factors in what type of loan you qualify for. We all have multiple scores depending on what a lender is looking for. You'll have one set of scores if you're applying for a credit card, different scores if buying a car or getting an installment loan, and completely different scores if you're trying to buy or refinance a house. All of our credit scores are generated on 5 simple things. 35% of your credit score is based on the payment history of open and prior accounts that may now be closed or paid off. 30% of your scores come from how we use our available credit. So, for example, do you pay your credit cards off every month, or are you close to the limits of what you can borrow? The closer to the limit of what you can borrow, the lower your scores will be. 15% of our credit scores come from the length of time the accounts have been open. The longer they've been open, the better. 10% from a mixture of the types of credit we have, installment, credit card debt, those kind of things. And finally, 10% comes from new credit accounts. For example, opening a lot of new accounts and accounts that have been open for less than a year may pull your credit scores down. Everyone's credit score is personal and stays with us for a lifetime, though they change continually depending on how we're using our credit. Higher credit scores improve your chances of getting the loan you want, but our scores also impact the interest rate of the loans. Lower credit scores often have higher interest rates because the risk looks greater to a lender or to Fannie Mae, Freddie Mac, FHA, USDA, or VA. Borrowers with high scores generally get offered lower rates, whether it's a car or a mortgage on a home. In some states, the rates we pay for car and home insurance are also determined by our credit score. It's not unusual for employers these days to check the credit of potential employees to decide how trustworthy and responsible you are. Lenders understand that everybody's credit score varies. Today, most borrowers have scores below 780. Monitoring your credit and working to improve credit scores when possible is a skill that anyone can learn and can save you thousands of dollars in interest over time. Be aware, though, that some of the free services which show you a score may not be the same numbers when a lender, with your permission, pulls your credit report depending on what you're applying for. Be sure to make all payments of loans for the correct amount and on time. Whenever possible, pay more than the minimum due. Even one late payment can dramatically hurt your credit scores. You can easily improve your credit score by cutting back on unnecessary expenses, using some of your savings to pay off bad debts, and opening as few credit card accounts as possible. Regularly checking your credit score history and maintaining a good line of credit can be the difference between getting the home you've been dreaming about in a payment range you can afford or not at all. Feel free to call me or contact me. You can apply online, we can do it over the phone, and we can do it face-to-face, whatever works best for you. At CMG Financial, we have a home loan for almost every borrower, and we'll work with you to help you understand and successfully navigate the home buying process, or refinance if you need it. Experience excellence at CMG Financial. I'm John Wallace. Thanks for watching.